What's going on, everyone? I'm Encore. This is Tomorrow Never Comes. And today I want to get into what would I do if I were to jump into the crypto markets all over again from the beginning, but without any knowledge. And maybe you find yourself in that position. Maybe you find yourself in a position where all you hear about is you should get in, you should get in, you should get in, and you don't really know where to start. So that's kind of what I want to touch on today. We have an ability, for those of us who've been in the market for any period of time, it's very easy to give advice that you should get in. We just never explain to you how. So I want to kind of jump into that right now. All right. Okay, so if I were to start all over again. Now, this isn't going back with the knowledge that I have. It's literally as if I'm trying to jump in and I have no idea what I'm doing. Okay? So I want to go over 5 things here. I want to go over percentages, funding, exchange, wallets, hot and cold, and something called DCA, which is dollar cost averaging. Those are the 5 things that I want to highlight. So first things first, for those of you who are numbers averse, and I'm not a big numbers guy, even though it may seem like it through this video, but this is very important to do. And what do I mean by numbers? So you need to determine how much money can you set aside to invest in crypto if you're not investing at all, right? If you are investing, what's the percentage of your total investment? You know, if you're in real estate, if you're in stocks, if you're in anything that's investment related, you need to carve out how much you can actually allocate to crypto in terms of being okay if it goes down. And that's always something you need to keep in mind. And that's for any investment. But if you're brand new and you're not used to the volatility, meaning the swings of it going up and down, you may have a harder time dealing with it. So it's really good to have a percentage of your entire investment portfolio kind of figured out, right? What percentages you want to put in. You know, is it 5%? Is it 10%? Is it 1%? All of that. You just kind of need to figure out what percentage works for you, all right? And when I say amount to set aside, you know, you have to factor in everything, right? Your expenses, if you are investing in something else, how much of that are you going to kind of take away from there and put into crypto, or just on a, you know, just in general from a paycheck perspective, how much of your paycheck can you take out week to week, month to month, you know, bi-weekly, whatever the schedule is. And that's what regular edition means. You know, unless you have a big chunk of money sitting around, you need to figure out a schedule that's going to work where you can actually put the money to use and actually make a difference in your investment. If you invest $100 today and then another $100 in 6 months, chances are you're not really going to see much growth in your portfolio. But if you're doing $100 a week, you know, $100 every 2 weeks, every month, you're going to see much better returns over the long run. Okay, so that's really what I mean by the numbers. Now, here's the thing, a little warning. The next few slides that I go through, we're still going to have some numbers, so it's not like the numbers are over here, all right? So the next one we talk about is buy, right? Now, I don't know if you guys know NSYNC. Maybe you've heard of them, maybe you haven't. But they had a song called Buy. I'm not an NSYNC fan. I'm just putting that out there. But they had a song that was BYE, buy. And so every time I say this, that always reminds me of that song. But anyways, so you need to find out what exchange, where can you go to buy crypto, right? So you've already kind of decided, hey, this is the percentage I can allocate towards crypto investing. This is how much money I can put in on a regular basis. So you kind of have that framework in mind. But then where do I go? So for me, my go-to is crypto.com. That's the place that I would go. I love the app. It's user-friendly. It's a clean interface. Things are pretty slick. So it kind of works out well. And that's a place. And it has a lot of features involved within the app itself. And I just gravitated towards that platform, and it's worked out well. So here again, remember I said we're not done with numbers. So now that you have a certain amount in your mind that, hey, this is how much for crypto I'm going to put in, I'm going to suggest 3 crypto assets if I were to start from fresh and I knew nothing. 3 crypto assets that are a must in your portfolio. All right. Bitcoin, which is the king of crypto. and digital property, Ethereum or Ether, which is like a computer in the sky, right? It's the software that runs the entire cryptocurrency market. And then USDC, which is a stable coin. And stable coin meaning it's pegged to the US dollar. You're not going to have that volatility. And you can do certain things with all three of these, but mainly USDC, that'll actually provide more capital going forward in the future. So, and I'm gonna touch on that. But you really need to decide, okay, what percentage am I, do I want to put more of a bet on ETH, outgaining Bitcoin over the long run? Or do I just want to kind of stick to 50-50 protocol and kind of see, or well, in this case, there's three of them. So am I going to do, 75% of my portfolio will be divvied up between Bitcoin and ETH, and 25% will be USDC. Think of USDC like your dry powder. Okay, this is your ammunition. This is your money on the sideline that you can kind of deploy if the market dips. So it's kind of your backup artillery, your reserves. All right, and that's really what you should have, and that's not something I did have when I first jumped in. So it's always good to have a percentage of your crypto assets in USDC so that you can always take advantage of the dips. All right. So then we get to what I like to call drop it like it's hot. Now, for those of you who don't know, I guess the theme is songs, right? So I hated this song. It's a Snoop and Pharrell song, and I absolutely hated it. But it's very catchy and it sticks in your head. And so for me, this is all about hot wallets. What's a hot wallet? I've covered this in a previous video, but a hot wallet really is something that's connected to the internet. It's plugged in, right? It's easily accessible, and you can use it for doing certain things. Whether you want to buy NFTs, you want to move from one exchange to another. Just an exchange can actually be treated as a hot wallet. You're going to keep a percentage there, just so you can do things with it, right? If you want to earn yield, right, which is staking, you can do that. And you always have to have some assets available to do that. If you want to buy NFTs, and it's going to go to your MetaMask, and then it's that MetaMask can be used to buy the NFT. There's also that. So for me, I would use Crypto.com and MetaMask, and I do today, right? Yeah, but again, the numbers, we can't get away from the math. You have to know what percentage are you willing to keep in a hot wallet. Are you going to keep all of it? You can do that, right? Understand the risks, the pros and cons with that. Are you going to do a 75-25 split where some goes here, 75 is here, 25% goes into a cold wallet? That is all dependent on your mindset and what you want to do with it. All right, so if I were to go here, if I were to go back, I'm going to Crypto.com. I'm going to buy my Bitcoin, my ETH, and my USDC. Then I'm going to pick MetaMask, and I'm going to pick a percentage that works for me that I'm going to keep both on Crypto.com and some in my MetaMask. And then the next one here, Ice Ice Baby, right? That's Vanilla Ice. I guess kind of aging myself here as I show you guys these songs. But this is your safe. This is your vault. This is, nobody has access to it but you. Nobody can hack it at all, right? Your keys, your crypto, your private keys, okay? You are 100% responsible for any asset that you put into here, okay? And so I have Ledger. Ledger is an example of a cold wallet. There's several of them, but this is the one that I use and have used in the past. So again, the numbers, right? We've already talked about how much will you keep in the hot wallet. Well, how much are you going to keep in your cold wallet? And I do recommend that you do that because, things can always happen to your account on an exchange. It can be frozen. They can suspend your account. The exchange can get hacked. While they have quite a bit of security involved, there is always that risk. So just keep that in mind. Okay, and this is like something you just lock away and you never look at. It just is. It's your safety mechanism in case everything else goes wrong. You have your assets in here. So the next one, it's not really a song. It's just, it's part of a song with Dollar Dollar Bill. I'm not going to get into all that, but I wanted to get into dollar cost averaging. Okay, so what does that mean? So a lot of people, what they do is, and I used to do this and have done this in the past, is you will save a chunk funds or capital on the side. And then as soon as the price dips, you go all in. Whatever you have left on the side, if it's $50, $100, $5,000, $10,000, you're like, hey, Bitcoin's gone from 40,000 now down to 37,000. I'm in, and you go all in. And what that ends up happening, Bitcoin then goes to 35,000, and then 32,000, and 30,000, and you have no money left over to invest into Bitcoin itself. So dollar cost averaging is you're always keeping a chunk on the side, but you're not going to go in heavy. Either way, I bought some when it goes up. I buy some when it goes down. It's just, you kind of want to have a regular schedule for that as well. You're going to buy on a weekly, or you're going to buy on a monthly. You just kind of have to figure all that out. And so this little quote here I took, or little excerpt I took from an article. It's from the online magazine called Next Advisor, and it was from Alex Bailey. And this was actually written February 21st, 2022. So quite recent. And it just says, if you invested $100 in Bitcoin every week, starting on December 18, 2017, near 2017, the year's peak price, you would have invested a total of $16,300. So $100 a week, right? December 18. And then your total investment would have been $16,300 by January 25th of 2021. So last year, okay, January 25th, your portfolio will be worth approximately $65,000. So that's a return on investment of more than, or almost 300,000. Okay, almost 300,000. So now if you'd taken that same amount of 16,300 and invested it all on December 18, 2017. So this is where I'm talking about the big chunk. Okay, so instead of doing $100 a week, starting on December 18th, you just have 16,300 sitting on the sidelines, and you're like, you know what? Whatever the price is for Bitcoin, I'm going all in. And so you invest all 16,300 on December 18, 2017. You actually would have lost 8,000 throughout the first 2 years. Okay, so your portfolio would recover, but you would have lost out on the ability to compound your profits in the meantime, and maybe even scared yourself into selling your Bitcoin at a loss. That's a very important point. So let's go back to the beginning here. So $100 a week, started on December 18, 2017, and then it would have turned into $16,300 that you've invested as a whole. Okay, by January 25th, 2021, your portfolio would be worth almost 300%. If you took the same amount of total money and you put it in on that day of December 18th, you would have been down 8,000 for the first 2 years. Okay, where the key point really is you scare yourself into selling your Bitcoin. Emotion is unbelievable. And for any one of you who's been investing in anything, I mean, real estate maybe less because you're not really checking prices or anything like that on a daily or frequent basis. But if you're in the stock market, and definitely if you're in crypto, you'll see and feel the highs and the lows until you kind of get used to it. And so dollar cost averaging, not only does it help you overall with your return on investment, it helps you from a psychological level, from an emotional level. You can sleep at night because you're just adding bit by bit by bit. And you're not throwing a big chunk, and then the next day it drops 25%, and you feel like the sky's falling, and that makes you want to sell. So it's very key. Dollar cost averaging will help you mentally and emotionally. Now, the downside to dollar cost averaging is you may miss some gains. So as I said, if you invest everything and tomorrow goes down 25%, there is a chance that you invest everything and it goes up 50%, right? And you missed those gains as you still have some chunk on the side. But trust me, it is much, much more doable from a psychological and emotional standpoint. It keeps you sane. It really will. And so what I would do is I would go back and I would just dollar cost average for the most part. When I had some capital, I was guilty of going in too heavy in the beginning. And things were, that's great as things trend upwards, but as soon as things go sideways and downwards, it's a lot different. It's a lot different. Okay, so just to wrap up some key points here is tracking. What does that mean? You have to have a portfolio manager, something that kind of links everything together where you can see your percentages. You might think that you know in your head how much Bitcoin, ETH, USDC, or some other assets that you have, But as the values increase or decrease, just change in general, you may lose perspective on your percentages in each. So it's good to have something that tracks it. Now, crypto.com, that's all there. So if you're on there, it'll give you kind of a pie chart and you can kind of see what is split up. But remember, I said I would take some off and put it into MetaMask, and I would take some off and put it into cold wallet. So those types of maneuvers you have to account for. So it's an Excel sheet. If it's you write it down, whatever it is, you have to stay on top of it just to kind of track where you are. All right. And then at the end, after doing all of that, you just rinse and repeat. That's the beauty of it. All right. You know, kind of figure out what your allocation is. How much can you add? How much do you want to invest? Where are you going to buy your assets from? How much are you going to keep on that exchange? How much are you going to move to MetaMask or another hot wallet? Are you going to take any of that and put it into a cold wallet? Okay. And so what I didn't touch on here is why would you want to keep some on an exchange? Well, every exchange now, for the most part, and I'm going to speak specifically about crypto.com, allows you to do things with assets that you keep on that platform. So you can earn interest. They even have something called a supercharger where you can earn assets of a different coin by staking their native coin. So I don't want to confuse you guys too much, but crypto.com has their native token called CRO. If you stake that CRO, meaning you lock it in for a certain period of time, in this particular feature, over a 30, 45-day span, you can earn interest, but in the form of another asset. So Bitcoin, ETH, Terra Luna, something else. You're gonna deposit one coin and get another coin in return. So they have all these different features. A lot of exchanges have different things that you can do. So there is some value in keeping some of your portfolio on these exchanges just to earn some interest and have some other features involved. Okay, so there is that part of it. But once you have that figured out, you just rinse and repeat, and you play around and you see what works for you. Okay, so I want to repeat, I am not a numbers guy, but this is very important, at least just from a high level, to see where you want to deploy your capital and where you need to kind of move things if you're too heavy in one thing, or you say, I'm heavy in one thing and I'm okay with it. Really, it's just giving you a plan. It's giving you something to kind of look at. It's not something you have to stick to, put a stake in the ground and never change, but it's there to help you change if you need to. So I hope that helps, guys. If you like the video, hit the like button, subscribe, share, and hit the notification bell just to keep updated on any new videos I do release. I do release one a day, and it's still going strong. So, you know, support as much as possible. And leave some comments below. I would love to hear from you guys. All right, remember, guys, tomorrow never comes. Please jump in the game. See you in the next one.